About the jobs report further with Vincent Reinhart, chief economist and macro strategist at Mellon. Vince, does this jobs report put the Federal Reserve in a very, very tough spot? How long could they continue to be patient here?
Oh, I think Jay Powell thinks the economy is in a good place. They have ongoing momentum. Nobody's talking about the recession word. And there's not a lot of evident pressure on costs with that 0.2 increase in average hourly earnings. So I think patience remains a virtue. What's important about this report is market participants are going to increasingly price out the inappropriate weight they were putting on easing. You saw Jay Powell's body English at his press conference on Wednesday. If he's going to go anyway, where it's more likely to be up than down.
Hey, Vincent, that drop in the unemployment rate was really because people left the labor force. Does that suggest to you that there's a little slack left in this job market?
Yeah, they had a hard time finding people on the household survey. Both unemployed and employed went down. And the net was the unemployment rate went down 0.2. The household survey is a much smaller sample of people than the employment part of the jobs report. So I wouldn't put a lot of weight to 1 month changes. I think the more significant thing is that the participation rate topped out. It's coming back down. And that does, in fact, suggest, if anything, that there'll be more pressure on the labor force going forward because there are fewer people showing up to work.
You know, Vince, we had job gains across the board. Wages rose at 3.2% over the past 12 months, certainly good. Does you think the Fed risks just inflating a bubble here, given the strength of what appears to be the strength of the labor market into the spring? What are your thoughts on that?
So one thing I would note is we now know that productivity it was increasing about 3.5%. And in that event, that firms can share some of that bonus with workers. So the wage gains aren't as threatening as that. I agree that the Fed risks fomenting financial excesses. We've had a call for a while that the next policy move would be a tightening. They just need proof that their theory that a low unemployment rate puts pressure on inflation eventually works. So once inflation starts creeping up, I think you'll see the Fed back in the frame. However, to get inflation creeping back up, you got to see evident pressures on costs, and that average hourly earnings number is an evidence of that.
You know, Vincent, to the average person, they see this report, they go, wow, sounds like things are just humming along, and how great that inflation is so low. But can you explain for us how low inflation can actually be a negative for the economy, especially at a time when everything else seems to be doing okay?
Yeah, so it is concerning. Among other things, it tells you that workers aren't sharing the benefits of an economy that has so much so much momentum. Among other things, it's got to be troubling to the Federal Reserve because it is counter to their theory that pressure on resources pushes up costs and inflation. And more than anything, it probably suggests that counter to what I had said, that productivity gains are so rapid, firms aren't really sharing the benefits of the current economic momentum with their workers.
You know, Vince, if the Fed, for some reason, they do come out and cut rates like the market expected going into this jobs report, do you feel as though that they do lose credibility given the attacks you've heard from the Trump administration?
So I would say that the U-turn that the Fed performed between December and January looks like an overreaction. Investors overreacted to soft data. The Fed overreacted to the market reaction, and then all other central banks around the world piled on with the Fed. In retrospect, a little steadier hand might have been helpful. In terms of politics, if anything, pressure from the president on the Fed chair I think just firms up his resolve, Chair Powell's resolve, and makes his committee more likely to go along with what he wants to do. I think what he wants to do is stay in the background. Just wait until you see evidence of inflation, and at that point, people will be wanting the Fed to raise rates. They'll raise rates.
All right, Vince Reinhart at Mellon, thanks for joining us this morning.